Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work and I think you deserve to have that. So with that, Euro-dollar. A lower indecisive doji cross yesterday after the previous session's second bearish black crow. Overhead, we had the familiar resistance of the dark blue neckline, currently at 117.07, of the significant combined June to July head and shoulders top, which also has a double top formed from the head and the second shoulder, plus the October 2021 high at 116.92. The move lower just about reached the next support, and one that had been hovering down there for the last 2 weeks, and that's the rising green short medium moving average, currently at 116.32, but was pretty much immediately rejected higher. Underneath that we have the November 2020 low at 116.02, with the 2019 high just below at 115.70. Now looking above, we have nothing much bar a pattern I'll shortly describe until July's high at 117.88 and June's high at 118.29, and the downtrends in between, which are currently 117.93 and 117.97 respectively. Now recently I believe the large combined head and shoulders top and double top pattern to be the more dominant pattern here, and I'd previously laid out targets for these patterns below. The head and shoulders primary target down in the 113.10 zone and the double top primary target down in the 114.55 zone have been achieved, but the secondary targets of both have become not only harder but also now a little out of reach, so I retired them. However, there is another pattern building up, a late June to date bright red descending expanding wedge pattern, currently 111.30 to 117.42. I'm now watching this pattern with great interest, especially as prices last week and the start of this week approached the upper bright red trend line, but then pulled down away from it. Finally, as I've now said repeatedly for months and months, we are set up with nearly 8 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now so far today, a further attempt lower, down to testing the green short medium moving average, but not by much and not stabilizing below it before returning back up higher than yesterday's close at the moment. Cable, aka sterling against the US dollar. A third bearish black crow yesterday after the previous session's indecisive spinning top. It's a further continued bearish reaction by the market after last week's attempt to penetrate through on the upside, and that's the congestion between the September 2020 high at 134.83 up to 135.81, which contains within it that congestion the green flatlining short medium moving average, currently 134.98. It was thus the second consecutive close below the green short medium moving average. Most interestingly, prices pushed down and closed below the September 2020 high at 134.83. This high is the base of what is now an overhead congestion area between 134.83 to 135.81 that seemingly capped the market in its attempts higher last week and this week. Below we now have the 2024 high at 134.36. And then the rising mauve medium moving average, currently 134.09, before we come to the close together but soon separating old neckline for the mid-May to late July head and shoulders top, which is currently at 133.5, and the bright red recent early July to early August descending expanding wedge pattern, and that's between 128.38 to 133.52. Now this pattern still has a primary target X above in the 136.78 area and a secondary hard to reach target X2 up in the 137.88 area. Both these now have a question mark hovering over them with the downturn we've seen in recent days. Finally, much like Euro-dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between, we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. Now, so far today, a further move lower, down to test the congestion at 134.36. That is just above the rising mauve medium moving average, but then returning back higher than yesterday's close. US dollar against the Japanese yen. A lower bearish black crow yesterday after the previous session's indecisive doji cross and pullback lower from the earlier bullish engulfing pattern and bullish opening white Mariposa. The market continues to be capped by the Fibonacci congestion at 148.68, possibly stretching now down to the Fibonacci congestion at 148.11. However, the next congestion of note above is the nearby slowly declining gold long moving average overhead, and that's currently at 149.09, with a little higher the 50% Fibonacci line, the July 23 to July 24 move at 149.61. Looking below, we have Fibonacci support, and it has recently been quite good Fibonacci support at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. Followed by what seems better support from the rising and quite close now green short medium moving average, currently at 146.55. Below that we now have the flatlining mauve medium moving average, currently at 145.44. Now overall we are still in between the dark blue middle time below, currently at 144.67, and the dark blue upper time above, currently 155.27, of the important, large, shallow and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here. Now the other one is the broken bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target up at 150.5 was reached 3 weeks ago, though we still have live a secondary, much harder target X1 up at 158.85, which seems increasingly out of reach, as last week turned out to be a weekly key reversal down. Now so far today, a lower open and then a small reactionary move up from the open, though still within yesterday and this week's ranges. US dollar against the CNH, the offshore Chinese yuan. A key reversal down yesterday, which to be honest was not that much of a surprise, as the previous two sessions were both indecisive doji crosses. This actually ties in with last week's weekly key reversal down as prices pierced the support seen for the last 2 weeks, and that's the flatlining green short medium moving average, currently at 717.88, though did not manage to close underneath it this time. Looking further below, we have the bright red trendline extension, currently at 714.95 for the mid-January to late April 2025 descending triangle, which is now touching Fibonacci supports at 714.95 and 714.48. That can be regarded as one single congestion zone. Meanwhile, the top side is still capped by the congestion between 719.64 to 719.91, which is actually quite a narrow range. Narrow congestion actually. Meanwhile, the tops consisting of specific respectively of the May 2020 high and the 50% Fibonacci line of September 22 to April 25 move. Now further up we have resistance from the slowly declining mauve medium moving average, currently 720.89, and dark blue neckline extension, currently at 721.82 of the late August to early November 24 reverse head and shoulders pattern. Finally, a strategic observation once again, and one I'll be continuing making here. Please note how the long moving average, currently at 724.61, has been, despite some up and down waves, relatively flatlining for quite a while. So if prices do stray away too far from it, then they seem to be brought back in towards it, and that applies in either direction. And so far today, well, an interesting day already. For a significant dip below the green short medium moving average, but not as yet stabilizing below it, hovering as we are close to the green short medium moving average. US dollar against the Brazilian real. A combined bearish harami, bearish opening black Mariposa, and a possible day 2 in a 2-day tweezer top after the previous session's quite long bullish closing white Mariposa. The market rejected the testing overhead, which was not really a surprise, of the slowly declining green short medium moving average, currently at 550.42. That is just ahead of one of the showrunners for this market since April, and that's the overhead bright red upper time, currently at 551.84 of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Beyond this, we have a recent July-based congestion band between roughly 552.21 to 561.09, within which now sits the slowly declining mauve medium moving average, and that's currently at 559.96. Looking below, we have the base of last week's action, which is the dark blue neckline extension to the June to September 24 head and shoulders continuation pattern. It's currently at 542.78, which sits in a congestion zone made up from the 50% Fibonacci line of the April 22 to December 24 move, and that's at 544.57 down to 540.16. Underneath that, we have a smaller congestion zone between the July 24 low at 536.76 down to the August 24 low at up to the August low at 537.5 and down to the congestion at 532.15. US dollar against the Mexican peso. A reactionary bearish black crow yesterday after the previous session's indecisive spinning top and earlier combined immediate countering bullish piercing line pattern and bullish opening white Mariposa. Prices tried pushing up through the recent cap on the market, and one it had been occupying since late last week, and that's the congestion between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and 1885.40. Containing the slowly declining green short medium moving average, currently at 1877.47. Above all this, we have, apart from the high 3 weeks ago at 1989.40, not that much resistance until the congestion band between 1915.03 to 1920.38, and that's made up from the March 20 low and the 50% Fibonacci line of the November 20 to April 24 move, respectively. Which has moving down through actually the mauve declining medium moving average, currently 1915.05. Meanwhile, below we have the very significant pairing of the February 20 low at 1851.71, along with the 61.8% Fibonacci of the big old April 21 to April 24 move at 1850.81. It's a narrow congestion, but one that's held up the market since early July. Now, so far today, a reactionary higher open and press upwards through the green short medium moving average and into that old 1876.94 to 1885.40 overhead congestion area, but not by much, and seemingly getting stuck and adhering to the green short medium moving average at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.